Hello, everyone. We're just going to give it a few minutes so that we can get everyone who was in the waiting room come into tonight's webinar. Thank you so much for attending our Transitioning to Retirement with an Income Stream webinar. Plenty of people want to attend this one, so we might just give it another 30 seconds or so that we can make sure everybody is in before we get started. Great presentation tonight. A lot of really good information. Really do appreciate you taking some time out of your day to learn about this subject. Two more, three. They're still coming. Very popular. Over 300 people registered for this webinar. So we really want to make sure that everyone is able to attend. Okay. Down to the last couple there. So pardon me, we might get ready. I think we'll get this one underway. So again, good afternoon, everyone, and thank you for attending today's webinar on transitioning to retirement with an income stream. My name's Peter Hoban, and I'm a member account manager with Brighter Super. A large part of my role is guiding our valued members towards a comfortable retirement, and we do that by giving them a better understanding of what it is that they can do with their superannuation. Now, by the end of this webinar, we'll aim to give you some of the tools to get you on track for an ideal retirement. I'm also going to be asking you some questions as we go through this webinar, just to help you get a better understanding of the content. Our Brighter Super does acknowledge the traditional owners of the lands on which we meet today, and we pay our respect to elders past and present. Brighter Super is proud to serve Queensland's 17 Indigenous councils, and we strive to provide positive outcomes for our members who identify as Aboriginal and/or Torres Strait Islander. An important point, it's important to understand that the information and the examples contained in this presentation are general in nature, and they have been prepared without taking into account your individual objectives, financial situation, or needs. It's vital when you're making decisions about your superannuation options that you obtain the relevant product disclosure statement and the target market determination, and you consider your own personal circumstances. You can access these documents and our financial services guide from the Brighter Super website. Now, today's presentation will run for about 35, maybe 40 minutes. Many of you have already submitted questions, and we've tried to incorporate those questions into the presentation. However, you can also post questions directly into the Q&A feature, and we'll aim to answer those during the presentation. Now, we're lucky enough to have Gemma standing by as a moderator today. Gemma's been with the fund for over 4 years, and she's regularly out in the field providing super health checks to members in different regions all across Queensland. In fact, just a couple of weeks ago, she was telling me today she was out at Dalby. Next week, she's going to be up in Townsville presenting a seminar for our members up there. So Gemma definitely gets out and about helping our members. Gem, do you want to come on and say good day?
Hi everyone, nice to meet you. And if you do have any questions at all today, feel free to just pop them in the Q&A chat and I'll answer them as we go.
Excellent. We should have time for questions at the end as well. So we'll try and answer some of those. As I mentioned before, we're also going to be running our poll questions throughout today's presentation. So when a question pops up on your screen, please just click on an answer that's appropriate to you. There's no right, there's no wrong answers. It just gives us a bit more information about what it is that we need to provide to you. So who is Brighter Super? We do have some non-members in the room, so I'll just quickly give a bit of background. There was a merger between LGIA Super, Local Government Super, and Energy Super, the energy industry. And then we acquired Suncorp Super. And that's actually enabled Brighter Super to increase our size and our scale. But we still do remain committed to investing in that personalised member services that you do know and enjoy, like these webinars. We now serve over 280,000 members, and we have more than 34 billion with a B, in funds under management. We receive double-digit returns for the balanced accumulation and the balanced pension options for the full year 2024. Now, let's talk retirement planning. One of the most common questions that I would get around retirement planning is, how much do I need in retirement? So if you're not sure how much you need, we've got some good news for you. There's what they call the As for Retirement Standards, the Association of Super Funds of Australia, and that's a great guide to start your planning. So the Association of Super Funds of Australia regularly surveys retirees who have paid off their mortgage and they're aged over age 65, and they ask them, what are they spending their money on? From that research, they've identified two types of lifestyle in retirement, a modest lifestyle and a comfortable lifestyle. Now, for retirees who are living on a modest lifestyle, it's probably going to be pretty conservative. We can see on the screen here today. Based on ASFA's research, they've defined a modest lifestyle, maybe including things like takeaway and the occasional cheap restaurant meal, certainly no fine dining. Infrequent domestic short breaks, so it might be a bit harder if you're wanting to travel overseas. Maybe maintaining basic private health insurance rather than that top level insurance, and probably owning a cheaper, more basic car, maybe not trading in or updating it during your retirement. As I said, unlikely to be money for travel overseas, and your social activities would maybe need to be a bit closer to home. It's probably a good point to just actually start thinking about how much it is that you're currently spending on your own lifestyle and how it compares to those figures that we can see on the screen. But when I'm talking to members, no one really sort of says to me, Peter, look, I'm planning on having a modest retirement. Most people say to me, I want to have a comfortable retirement. So what does a comfortable lifestyle look like? Well, most people that I assist are looking forward to a lifestyle with more options. And we can see here, based on ASFA's research, they've defined a comfortable lifestyle, including annual domestic and the occasional overseas travel. Social activities that include eating out maybe 2 to 3 times per week. Maintaining a vehicle and your home, maybe doing some renovations while you're retired. And being able to maintain that mid to maybe even high level private health insurance. Again, I would encourage you to take a moment to think about what type of retirement lifestyle you're aiming for. Once you've got an idea of how much it is you might be spending, then you can have a look at how much it is you might need to fund that spending level. So the figures we can see on the screen at the moment are actually based on someone retiring at age 60. So you do need to remember that if you retire at the age of age 60 and you're planning on getting the age pension at some point, you may need to fund your retirement yourself through to age 67, which is most people's age pension age. Let's have a look at this different information on screen. We can see for a comfortable lifestyle, a couple would be looking at a retirement balance of about 660,000. And a single person would be just over 500,000. And of course, you may need less if you're looking at retiring later. The comfortable figures that we're seeing here, the modest figures, that would be factoring in some sort of age pension from age pension eligibility, maybe a mix of super and the age pension. But please remember, everybody's lifestyle is different, and we really do encourage you to take your own personal circumstances into account, as you may need more or less in retirement, depending on what your needs are. So now that we know how much it is that we may generally need, let's have a look at the next steps. Probably the number 2 question that I get is, when can I access my super? So to access your super, the first step is you need to have reached your preservation age. And for anyone born after the 1st of July 1964, their preservation age is age 60. So most people probably attending tonight have probably got that preservation age of age 60. Now, super is primarily designed to give you an income in retirement. There are specific rules relating to when you can access your money, and these are called a condition of release. So to access your super, you need to get to your preservation age and meet a condition of release. So let's go through these in a bit more detail. Permanent retirement, pretty self-explanatory. You've finished work and you don't intend to work any time again in the future. The second one there that not a lot of people are aware of, ceasing an employment arrangement after age 60. So you can actually access your funds from age 60 onwards if you leave your employer and say, go to another job. You could leave one employer, go to another employer. All the super you've built up to that point in time becomes invaluable. And that job that you get, the second job, say that you go to, it could be full-time, part-time, casual. It's that you have ceased a work arrangement after age 60. Now, there's also here probably what they, might call the ultimate release condition, turning age 65. So upon your 65th birthday, you've actually got full access to your super, regardless of you're working or not. Age 65, it's available for you there. And then, of course, commencing a transition to retirement account. So once you've actually reached your preservation age, but you are still working, you have the option of setting up a transition to retirement pension account. And that's what we're here to talk about today. A transition to retirement account might allow you to use your super to, say, supplement your income, reduce the amount of work you do, or even be used in a tax minimization strategy. Now, a really important point, if you do have a defined benefit account, it's worth having a chat to us because different release conditions apply for members who have a defined benefit account. But let's get into a first poll question here. Anyone at the webinar tonight plan on accessing their super before retirement? Okay, answers coming through thick and fast. Plenty of people attending today. Great to see. Interesting. Interesting. So it's probably about a 60-40 split. About 60% of people saying that they're not planning on accessing their super. About 40% of people are planning on accessing their super before retirement. So even for those who aren't planning, it's good to know what it is that you can do, even if at the moment you're not planning on it. Okay. So, sorry, I'll just get this one going. So there are two main components of your superannuation, what they call the taxable and the tax-free components. When you make a withdrawal from super comes out of these components proportionally. Now, a really good basic rule is that once you are over age 60, there is no tax on anything how you take out of your super. Age 60, doesn't matter if you take a lump sum withdrawal, you get a payment through a pension account, you're over age 60, no tax on anything you take out of super. However, if you do access before age 60, there may be some tax payable. So if you're taking it as a lump sum, say before age 60, if you've met a release condition, it's tax-free for the first 245,000. If you access any more than that 245,000, taxed at 17%, which includes the Medicare levy. If you choose to open an income stream account, also known as a pension account, as we said, over age 60, no tax on the money you take out. But if you actually access it before age 60, those payments are taxed at your marginal tax rate minus a 15% offset. But I do just want to reiterate there, the important point, once you're over age 60, withdrawals from both components are tax-free. It's important to note that both the tax and tax-free components will exist when you're over age 60. Regardless of your age, there will always be a taxable and a tax-free component. So if you're over age 60 and you see that tax-free component, don't panic. Because you're over age 60, there won't be any tax on anything that you take out. Now, income stream products within Brighter Super are called pension accounts. And these are designed to give you an income in retirement or as you transition to retirement. Let's have a look at how a transition to retirement pension account, also known as a TTR, works. Why would people open a transition to retirement account? Well, many members choose to set up a transition to retirement once they reach age 60 because, as I mentioned before, the income from super is tax-free. They might use it to work less. A transition to retirement account could help you cut back on your work hours, and you can receive a regular pension payment to supplement the income that you have lost by working less. So reduce your working hours, but not necessarily your income. People may be able to use the funds to reduce debt by receiving additional income from transition to retirement payments, or increasing your work hours. Particularly a couple of years ago, when interest rates started going up, a lot of people were contacting the fund wanting to start to access their super to start to pay down some of that debt. People might use it to increase their super contributions and reduce the tax they're paid. The way they do this is they might look at increasing their contributions to super, such as voluntary salary sacrifice, potentially making the reduction in take-home pay, and then topping it up with tax-free income from a transition to retirement account. Definitely something that you want to get advice around. They might look at receiving a lump sum payment. A transition to retirement doesn't have to be received in a fortnightly or a monthly payment. People can actually ask to receive it as an annual payment. So essentially a lump sum payment once a year. You even have the opportunity to roll that back into your accumulation account if you like. But it's important to remember, please do think about, if you do access your super prior to retirement, what is going to be the impact on your future retirement lifestyle? Because after all, you're using money now that won't be there in retirement. Let's have a bit of a higher level look at the difference between an accumulation account and a TTR pension account. So starting with the accumulation account, this is where your contributions from your employer, salary sacrifice, any voluntary after-tax contributions go. In an accumulation account, you choose an investment option and that generates a return, which helps grow your balance along with those contributions. Now, returns on investment or investment earnings in an accumulation account are taxed at 15% before they're applied to your account. You don't need to worry about the tax. We withhold that 15% tax, send it off to the ATO, and then the returns are added onto your balance. Now, when you've turned 60, you can potentially access your super through a transition to retirement pension account. Like in the accumulation account, your transition to retirement account is still invested and it still receives those investment returns. And in a transition to retirement account, investment returns are also taxed at 15%. If you do set up a transition to retirement account, you do need to withdraw a minimum amount each year. So for anyone under age 65, it's 4% of the balance. With a transition to retirement account, there's also a maximum amount that you can access in a year. So at the moment, that's up to 10% of your balance in a financial year. Now, that minimum 4% and that maximum 10% that you must access or you can access, that is recalculated on the 1st of July each year, and we let you know what those amounts are. So a transition to retirement account, how does that work? Well, number one, you choose how much it is to open your transition to retirement account. So it stays within super, as we said, if you like to think of it on the screen, a horizontal movement out of your accumulation account into the transition to retirement account. You do need a minimum of 20,000 to start a Brighter Super transition to retirement account. Most members do actually choose to keep an accumulation account open as well, as they will be still receiving contributions from their employer, or they might need to maintain insurance. Contributions from an employer can only be paid into an accumulation account. Insurance premiums can only come out of an accumulation account. So step two, as we said, your funds are still invested when they're in a transition to retirement account. So you can choose from a range of investment options, generally the same as your accumulation account, from lower to higher risk and volatility. Step three, you want to choose the amount you want to get paid. So as we said before, generally between 4 and 10%. Now, if you keep your transition to retirement account open into a new financial year, payments are calculated on the 1st of July each year. And then the last step that we can see has just come up here. Choose your payment frequency. So payments in pension accounts can be made fortnightly, monthly, quarterly, half yearly, or annual, that lump sum payment that we're speaking about. I just want to reiterate, for defined benefit members, it's a little more complex. Please reach out to us for more information, but it's basically the accumulation component that can be used for a transition to retirement account. Well, let's have a look at how a transition to retirement account may work for a Brighter Super member who is looking to reduce their working hours. We've got Tom. Tom here is 60 and he's been working for about 38 years, so he's definitely looking to ease his way into retirement. He's spoken to his employer and he's planning on reducing his working hours to 3 days per week. But he does need to maintain a similar level of income to what he is currently receiving. So we've got option A. Option A, he doesn't commence a transition to retirement, continues to work full time, $70,000 a year before tax, works out to be approximately $56,000 a year after tax. However, option B, he decides to set up a transition to retirement account. Based on advice he received from Brighter Super and the amount that he needs for his lifestyle, he transfers $180,000 from his accumulation account into the transition to retirement account, and he elects to draw down the maximum 10% and have that paid as a fortnightly income. So the outcome now is he receives a gross income of $42,000 annually from his employer, approximately $37,000 a year after tax, but he also draws an additional $18,000 a year, tax-free because he's over age 60, from his super. So outcome there, $55,000 a year after tax. So pretty much the same as what he was getting when he was working 5 days a week. He's only working 3 days a week. Fantastic. Tuesday, Wednesday, Thursday, he has a 4-day weekend. This is just one example of using a transition to retirement account. The point that we want you to take away is that a transition to retirement really is flexible. There's a range of options, but for how it would work best for you, please speak to us and get advice around that. Now, to help you prepare for your transition to retirement, there's some simple steps, some actions that you can actually take right now from here. There's a range of tools and calculators on our website. We do encourage you to use our online retirement income calculator, and that's located under the resources tab on our website. Log in to brightersuper.com.au. Actually, you don't need to log in. Just go to brightersuper.com.au, and across the top, there's a range of tabs. Under the resources tab, look for the retirement income calculator. This calculator models how you're tracking towards your retirement goal. As with all modeling tools, it is based on metrics that may change over the time, particularly if you're a long way from retirement, but it can help you explore how small changes can make a big difference in retirement. We've also created a new calculator there, if you haven't been on the website for a while, called What Age Can I Retire? It asks some questions about you, how you're invested, your contributions, other income sources such as, say, shares or investment properties, your own retirement goals, and it'll help you determine when you can retire, and it will provide the next steps if you're on track or if not on track, what you need to do to get started. Both of these calculators take about 10 minutes to work through, 10 minutes time well spent. So we're going to actually ask our new poll question here as well. Anyone watching this webinar plan on using one of these calculators following today's presentation? And again, these answers coming in thick and fast. Wow, great. Shows an engaged audience. Love to see that. And what I can actually see, it's about 90% of people are planning on using these calculators. So yeah, just to give it to you again, if you go to our website, brightersuper.com.au, up in the sort of top right-hand corner, there's a tab there called Resources. Just hover the mouse over it and it'll open up another menu down the right-hand side, Retirement Income Calculator and What Age Can I Retire? If you get the What Age Can I Retire and it says 0, don't panic. It's not saying that you can't ever retire. It means you could probably retire right now if you meet those release conditions. Another thing, another huge step for retirement, and I am a massive advocate for this, and it's receiving advice about your superannuation. At Brighter Super, we offer 4 types of personal advice options now. We've expanded our offering, 4 types of personal advice options suited to our individual members' needs. So if you're looking for specific information about, say, transitioning to retirement, there are 2 types of advice that may be beneficial to you. One of our new advice offerings is a retirement health check, and this is done with one of our financial advisors, and it helps you understand if you're on track for retirement and the longevity of your funds. Now, to help keep the cost down for these appointments, they are done over the phone, and there is a fee, only $330, and that can actually be deducted from your super balance. So if you're kind of wondering, you've used the calculators or you've done your own calculations, you've got your spreadsheet, but you're kind of wondering, am I on track for the retirement that I'm aiming for? If you want to get a bit of a guide, a bit of a second opinion, having one of our financial advisors run the numbers for you. $330. $330 that includes you and your spouse together. Again, that's a great deal and money well spent. Proven to be extremely popular since we've introduced those. The other bit of advice that may be handy is what we call scaled advice. So scaled advice is personal advice about your, say, retirement and tax strategies. And if you're looking at setting up a transition to retirement account, actually setting one up, this would be the suitable advice for you. The advisor is going to help determine what impacts accessing your super may have. They can provide strategies around the investment options and implement the retired recommendations. So they don't just give you the advice and say, off you go. Forms are on the website. They can help you implement the recommendations as well. The fee for scaled advice, $990. And again, that can be deducted from your Brighter Super account. So if you're looking at setting up a pension account or something like that, and you're wanting an advisor to help you, you might not need that comprehensive retirement advice. $990 off your super balance to get the assistance of an advisor, again, I think is a great deal. As you notice on this slide, there are also other advice options available. So if you would like to talk to us about this, we really do encourage that you actually book in for a super health check. Super health checks like what Gemma, who is moderating, is out there doing. We've got a dedicated team of member account specialists who are here to support you. If you'd like to talk to them one-on-one for more information, say about a transition to retirement account, book in for a super health check. You can see the QR code up on the screen. If you whip out your phone and scan that QR code, you'll receive a link to book a super health check in the coming days. The super health check covers a range of topics, including insurance, contributions, salary sacrifice, giving you a bit of a guide whether you do need that personal advice we mentioned in the previous screen. We've always got people doing digital super health checks as well. So if they're not coming out to your workplace or going to be where you be, you can book in and do a Teams super health check. Big fan of Teams meetings because the person you're doing it with can actually share their screen, and it makes it a lot easier to understand than, say, a whole bunch of numbers or a whole bunch of figures and dates coming down the phone line. You can see what it is they're talking about on your screen. It's never too early to start planning for retirement. Quite often when people are doing their retirement planning, one of the biggest assets they have is time. You don't want to leave it to the last moment. As our manager of the advice service said, you don't want to start at the finish line. So, yeah, if you do want to start your planning for retirement, talk to us, find out how we can help. If you're after more information on the transition to retirement product, the website's a great place. Under that resources tab, there's another section. It says forms and info sheets. And that's where you can get information on both transition to retirement pension accounts and what we call the considering retirement income street info sheet. If you're the type of person who likes to read through a bit of information before making contact, that's where I'd go. Additionally, the product disclosure statement, or the PDS, the pension account PDS, it's a good place to find further detail about pension accounts. Webinars like this, also a great way to get specific information on a variety of topics. This is not the only webinar that we have or will be holding. We've actually got quite a few coming up in the next few weeks around insurance, Super 101 investments. If you go to our website, again, under Watch Retirement Seminar, there'll be a listing of all our webinars coming up, or you can scan this QR code. You can give us a call. Pete mentioned that we've got a webinar on insurance coming up. Can I get booked in for that, please? Check this page regularly, as we're often adding new dates and new topics. Great thing about the webinars as well, you register for a webinar, even if you don't attend, we'll actually send a link to the recording so you can watch it at your leisure. So we've got the poll question up here that after today's webinar, are you planning on getting some advice? And again, fantastic to see that 70% of people are actually considering getting advice or are going to get advice. I'm a huge advocate for advice. I can tell you on a daily basis, I see the benefit that members get by receiving qualified personal financial advice, particularly around their superannuation. So I mentioned we did try to answer all of our or as many as possible of our pre-submitted questions. We built the webinar around the questions that are submitted. But what I'm going to do is invite Gemma to come back on screen and ask any of the questions that we weren't able to, say, get into the Q&A chat or that people had submitted. During the Q&A, I'm actually just going to go back to that Super Health Check slide with the QR code. So you've got additional time to scan that and book yourself a Super Health Check. So I should mention, no charge for the Super Health Checks. Part of your membership. You don't have to pay any extra. So if you are wanting to have a bit more of a conversation while we're having this Q&A, whip out your mobile phone, scan that QR code, book yourself in for a Super Health Check. Gem, how did we go with the questions?
Thanks so much, Pete. And yeah, we do have quite a few questions where it is great to book a Super Health Check because we can discuss your individual circumstances a little bit more one-on-one in a general nature. We do have a few questions that have come through. So I'm going to throw the first one out to you, Pete. It's from Peter. So another Peter. Peter wants to know, he's just turned 60. He's employed part-time permanent, working 25 hours a week. He has a mortgage on his house. Wants to know, am I eligible to use my superannuation to reduce/pay off this loan?
Okay. Oh, well, good question. Thanks for submitting that one, Peter. Always a pleasure hearing from another Peter. So yeah, I think we had there on the presentation. Once you've reached age 60, even if you're still working 25 hours a week, if you've got at least $20,000 in your accumulation account, you can actually set up a transition to retirement account, start accessing super between that 4 and that 10%. Basically, once we have made that payment into your bank account, it is yours to do what you want with. As I mentioned, yeah, once interest rates started heading up a couple of years ago, we did have quite a few people contacting us wanting to access their super to pay down their mortgage. Like I said, just keep in mind that if you are doing that now, it's money that will not be there in retirement.
Thanks, Pete. We do have another question from Sharon. So Sharon wants to know, is it true that you can't access your super until you're 70?
Oh, okay. Well, Sharon, great question. Glad you asked it. So when it comes to retirement in Australia, there's actually no retirement age. You can retire whenever it is you like, as long as you can fund it. When it comes to superannuation, there's your preservation age that we spoke about. So, if you're born after the 1st of July, 64, you've got a preservation age of age 60. Then there is the age pension age, which is completely separate to your superannuation. For a lot of people at the moment, their age pension age is age 67. Every now and again, you do hear things about the age pension age maybe getting raised to age 70. Nothing to do with superannuation. At the moment, it's age 67. Personally, I'd be thinking politicians would be pretty loath to, go to an election on the promise of raising the age pension age. But as far as your super, it's your preservation age. As far as the age pension, for a lot of people at the moment, it's age 67.
Thanks, Pete. We do have another question from Belinda. Belinda wants to know, as her partner is 5 years older than me and retiring at 60, she would like to transition to retirement or to transition at the age of 55. Is there a minimum age requirement for TTR?
Okay, well, this kind of, I suppose, ties in with that previous question. So thank you, Belinda. Preservation age, that's the thing. If your partner, say, retires at age 60, and you want to stop at age 55, apart from things like severe financial hardship or, compassionate grounds, that age 60 is the age that you can access your super. Maybe after talking to your partner, they're happy to supplement your income from transitioning to retirement from their super. That'd be a conversation to have with them. But as far as accessing your super, or anyone accessing their super, hitting your preservation age is that first key age.
Great. And I think we do have time for one more.
Okay.
From Chris. Chris wants to know, how much do I need invested to have a comfortable income in retirement?
Oh, okay. Yeah, well, Chris, we did bring up those ASFA standards. So I'd encourage anyone who missed that to actually jot that down. ASFA, Alpha Sierra Foxtrot Alpha. If you actually Google ASFA retirement standards, I think the first link there takes you to the ASFA webpage, and you can actually download what they call the retirement standard budget breakdown. So that's where they actually go into a weekly figure of how much people might need for things like, insurance, cars, fuel, food, clothes, leisure, travel. I think there's about 60 different line items, but you can go in and really have a deep dive into how they come to those figures for the modest and the comfortable retirement. A document that I pretty much look at every day in my conversations with members. So yeah, if you want to get a bit more detail about how do they come up with those figures for comfortable and modest retirements, go and have a look at that ASFA retirement standard. That's the key. Thanks, Jeff.
Thank you so much. And look, with all of the questions that haven't been answered in the chat today, we will have someone reach out to you and have a chat on the phone.
Excellent. Yeah, I did see that there were quite a lot of questions submitted, but we are, conscious that most people have probably had a pretty long day. We appreciate you taking the time to attend this. So we bring it to a close. Last question. We can see it on the screen there, just for us. Overall, how satisfied were you with today's webinar? Excellent. Well, thank you all very much for attending today's presentation. Hope to see you in some future webinars and hope to see you in a super health check sometime soon. Thanks for coming.